Hello guys, what's up? How have you been? Happy new month, by the way. Happy new month. I hope you had a great quarter. So this is the end of the first quarter, the beginning of a new one. I hope you had a great quarter. First quarter of the year is now done. I hope you had a great one, although it's most often the roughest, but I hope you managed it well. So if you're new to the channel, my name is Laurent, but you can call me Black. Welcome to the Black Forex Academy, where we do provide content related on trading. So if you're new, hit on the subscribe button because I believe this video will be of help to you, and so will this channel. In this video in particular, what we're going to be talking about are types of entries, obviously. So I'm going to talk about types of entries based on price action, but this will be a series, obviously. In my journey, in my trading journey, before I managed to land on my trading strategy, which I believe and use to this day, that has proven to be profitable and consistent, I did move from one strategy to another, trying to find that holy grail system. But along the way, I did manage to learn a couple of things based on different strategies. So I'll be talking about them. I'll be talking about entry strategies in different strategies. So this will be like a series. So if you're interested in that, stay tuned. Don't forget to subscribe so that you won't miss out. Today, what we're going to be talking about are price action entry strategies, okay? So price action entry strategies. In price action, we do have three different types of entries, right? Right. So now with entries based on price action, we do have, as I just said, three. We do have three main types of entries. So if we do have the first one, which is the breakout, okay. We do have the second one, which is the break and retest. Okay. And then we do have the third, which is called the risk aggressive, or what some people like to call it as, sniper. I'm just playing. So in price action, these are the main types of entry strategies in which, people do take the entries on. Okay. So I'm going to be talking about them separately. Okay. So now we're going to start with the first one, which is the breakout strategy. So the breakout strategy, this basically means that if maybe we have a market structure here, okay, and we do have another structure here. So let's assume that prices were coming down from here, came back here. No, this will be a break and retest. So, okay, this will be a break and retest. Excuse me. Okay, so now for a breakout, it means that prices will just push, right? Once they break above this market structure, that means what you'll be looking for is the close of a candle to actually push you to the next market structure, right? Now, the characteristic of a breakout strategy is that your entry has to be above this market zone here, meaning that first thing first, in a breakout strategy, what you need to be looking at, or what you need to be focusing on, is the momentum. The momentum is the big thing in the breakout strategy, because without momentum, if the prices don't have enough momentum to push, if the market doesn't have enough momentum to push all the way up here, that means it will retest somewhere around here in this zone. And if you did take your entry here and then it does push below here, then that means you have chances of being stopped out, right? So now in a breakout strategy, momentum is the key factor. If prices do break above here with a great deal of momentum, then you are obviously sure that chances of it retesting here are few or dim. So that means prices will keep on heading all the way until to the next market structure here, right? So now an example, you can see here's Chef JPY. Prices did, for instance, in this market structure here, they give us a beautiful ascending channel. And look at this breakout momentum here, right? You can see that prices did break out with a great deal of momentum, strong, crazy, heavy bullish momentum. So this indicated that prices are having a small chances of retracing to around here, and they did end up pushing all the way to the next market structure here. So that means this was a crazy move based off this momentum, right? So this is a breakout strategy. Now, if you are a breakout strategist, that means you would have taken a trade here, and your entry, your stop loss would have been below here, and that would have given you a beautiful, let's see if it was worth the risk. It would have given you a beautiful 1:4, beautiful trade without any retracement until it hit take profit. So the thing about breakout strategy is that you need to read the momentum and you need to have that long-term bias, like what's really going on in the market. So that will help you understand what is going to happen in the market long-term, right? So now based off the breakout strategy, thing you need to be considering is momentum once the prices broke above this market structure here. So yeah, that's the first strategy, breakout strategy. Now we do have a break and retest. So with the break and retest, what happens is that prices do break above a market structure. Let's say prices do break above like this, and then they retest this market structure before heading for the next market structure. So this is a break and retest trade, okay? These are most often the safest trade, but they don't come around that much often, although they do, but not as much as a breakout strategy, right? Although it's actually more risky. So if prices do break and retest, this is a breakout and retest trade, right? So in this type of trade, what you need to be looking at is if prices broke above here, but then you feel as if they don't have enough momentum, right? I hope you guys know about reading momentum, because that's one of the biggest things that you can actually do as a trader, is help yourself understand momentum in the market, okay? So now let's look at maybe this example here, right? Okay, so here we did have, let me put a line here, because this was also a little bit minor resistance, right? So for instance, here you can see prices did break above this previous high. They broke above it. So once prices closed above this previous high, that means the market structure had been broken, right? And if you really look closer, you can actually see here, this was actually one bottom, one, two, and actually this was a triple bottom. This was a triple bottom pattern, and this was the neckline. So prices did break above here, but if you look at this momentum here, you can see that it had a very small momentum. It didn't have that crazy bullish power, right? So that means with this momentum, to get to the next market structure up here, it will have been very difficult. So what does that mean? That means prices will come back to the previous market structure, obviously in this area here, and then look for more bullish momentum before they actually, take off. Before they actually take off. So this is a breakout and retest trade. That means prices broke above, breakout, retested the previous market structure, and then gained that bullish momentum. You can see even these candles are different from these candles. These ones have a lot of wicks, but these ones have huge bodies, right? So that means they gained more momentum after retesting here. So that means a breakout and retest trade strategy is actually based off if there's no enough momentum in the market, that means prices will have to retest a broken market structure before they actually head on to the next market structure. So while trading a breakout and retest trade, you need to understand momentum. So if you see prices have broken a market structure, but they don't have enough momentum, that means these prices are more likely to retest before they actually, head on, because they don't have enough momentum to keep on pushing higher. But if prices do break out with the strong momentum, that means prices are most likely going to, keep on pushing higher. So that's what's up with a break and retest trade, right? Okay, now let's talk about the last price action entry strategy that people use and which people believe to be the best entry. That's what most people believe, right? Risk entry aggressive, or people call it, sniper. It's a risk entry, or it's called aggressive entries, sniper entries. Okay, now with sniper entries, what people actually do is that once you get in the market like this, right, you understand that prices are based off demand, supply, support, resistance, whatever you want to call it, right? So if prices are, for instance, looking at this, let's say these are daily structures. So that means if prices get up here, if this is a strong daily structure and it has been tested multiple times and has shown effective resistance, that means once prices reach here, most likely they're going to push below. They're going to push lower because they're going to be resisted. They're going to be resisted from going higher. So what this means is that once prices reach here, there's a high chance that they're going to bounce off, even if they're not going to reach this previous market structure, but they're going to bounce off this structure. So what this means is that once prices reach here, you can actually be looking for entries at around this point here. So if prices do bounce off here, or if prices do reach here, that means you can actually take a trade here and get a sniper entry. So that will be very easy for you to actually understand and actually get a entry at a very low risk entry at around here. But it has to be a strong market structure. Otherwise, it's most likely going to be broken and it will, not hold value. So the most important thing about these risk entries is that it has to be a confirmed strong market structure, right? Otherwise, it won't hold any value. So that means once prices reach here, you just have to wait. Once prices reach on this strong market structure, then you just let it be, and you'll see rejection, you'll see whatever. So that means even if prices do bounce off here and they don't reach all the way down here, if you're already in blues, what you have to do is that you just go break even. So that means you'll be risk-free in this trade. So you'll protect your capital, and if the trade does manage to keep on heading lower, you'll make a couple of bucks, you'll make money, the trade will take profit. And if it doesn't, let's say if this was just a retracement and it keeps on heading higher, guess what? You'll be stopped at break even. You won't lose anything. You'll just have taken a risk and you won't have lost anything. So it's part of the journey, it's part of the process. So that's how you can actually take a risky or aggressive entry, what people call sniper entries. Sniper entries are taken on good strong market structures, and that's where you can actually get these entries, because you understand that prices, once they reach here, most likely they're going to bounce off, they're going to be rejected. So that's where you can actually get these good sniper entries. Okay, so that's all about these types of entries based on price action, guys. If this video has been of help, please hit that like button. Don't forget to subscribe. Share this video with a couple of friends that you believe will be of help to them. So till next time, guys, this was Black speaking. Peace. Okay.